Hello everyone, welcome to the market opening bell for Monday, February 16th, your 10-minute guide to the stock market. Hong Kong stocks followed the declines in overseas markets last Friday. The Hang Seng Index opened lower by 392 points, narrowed its losses to 258 points in the early session to reach 26,774, then fell again. In the afternoon, it once dropped 588 points to a low of 26,444. It closed down 465 points or 1.7% at 26,567. The X-share index fell 142 points or 1.6% to close at 9,032. The Hang Seng Tech index fell 48 points or 0.9% to close at 5,360. Total market turnover for the day was 257.5 billion Hong Kong dollars. Southbound funds total transaction amount reached 100.761 billion, with Southbound funds extremely active on the last trading day before the Lunar New Year holiday, recording a net inflow of 20.219 billion into Hong Kong stocks, the highest since February 5th. Among the net inflows included Tracker Fund at $3.676 billion, Alibaba at $2.299 billion, and Tencent at $2.263 billion. Net outflows included PopMart at $170 million, YOFC at $149 million, and CNOOC at $144 million. Last week, Southbound funds recorded a cumulative net inflow of about 27.8 billion and have maintained net inflows for 4 consecutive trading days. For the week, the Hang Seng Index rose slightly by 8 points. The H-share index rose slightly by 1 point. The tech index rose 14 points or 0.3%. Technically, the Hang Seng Index fell close to the 50-day moving average at 26,391 and the 100-day line at 26,310 again. If both lines are breached, it may test 26,000 points further. But the specific trend still depends on overseas markets, especially US stocks during the Hong Kong stock market holiday. On the eve of the long Lunar New Year holiday, the 3 major A-share indexes opened lower and continued to fall. The Shanghai Composite Index fell below 4,100 points, down 51 points or 1.3% to close at 4,082. The Shenzhen Component Index fell 182 points or 1.3% to 14,100. The Chinex Index fell 52 points or 1.6% to 3,275. Total turnover in Shanghai and Shenzhen markets combined was 1.9868 trillion yuan. For the week, the Shanghai Composite rose 0.4% cumulatively. The Shenzhen component rose 1.4%, the Chinex rose 1.2%. In the year of the snake, the Shanghai Composite rose over 25% cumulatively, while the Chinex rose nearly 59%. A-shares will be closed for the holiday from February 16th Monday to February 23rd Monday, 2026. During this period, Stock Connect services will be suspended and normal trading will resume from February 24th Tuesday. The renminbi central parity rate was set at 6.9398 against $1, up 59 basis points from the previous day's central parity, hitting a more than 33-month high. For the year of the snake, the central parity moved from 7.1698 to 6.9398, appreciating 3.3% cumulatively. The People's Bank of China announced that renminbi loans increased by 4.71 trillion yuan in January, below market expectations of 5 trillion and lower than the 5.13 trillion in the same period last year. January's social financing scale increment was 7.22 trillion, 166.2 billion more than the same period last year, mainly supported by the front-loading of government bond issuance. Market expectation was 7.085 trillion yuan. Although the total social financing hit a record high, new loans fell short of expectations, reflecting that the real economy's autonomous financing demand, especially in the private sector, remains weak. At the end of January, mainland broad money supply M2 grew 9% year-on-year, above market expectations of 8.3%. Narrow money M1 grew 4.9% year-on-year, above expectations of 3.6%. Currency in circulation M0 grew 2.7% year-on-year. Net cash injection in January was 519.1 billion yuan, indicating relatively ample market liquidity. Hang Seng Index's company announced the Q4 quarterly review results. Hang Seng Index additions include CATL, CMOC, and Laopu Gold. Removal of Zhongsheng. The number of constituents will increase from 88 to 90. Hang Seng China Enterprises Index additions include Ke Holdings and Horizon Robotics. Removals of China Resources Beer and Mengniu Dairy. Number of constituents remains at 50. Hang Seng Tech Index has no changes. Number of constituents remains at 30. All changes will take effect after market close on March 6th to 6 Friday and from March 9th to 6 Monday. AI large model stocks continue to be sought after, with MiniMax and Zhipu hitting new highs again as the Lunar New Year approaches. Domestic large models are ushering in a new wave of launches. Major tech firms including Zhipu, ByteDance and Alibaba have successively released their flagship products. On February 12, Zhipu officially launched and open sourced its new generation flagship model GLM-5, which was the mysterious model Pony Alpha that previously topped the popularity list on the global model service platform OpenRouter and sparked crazy speculation in the industry. On February 13, MiniMax officially launched its new generation text model MiniMax M2.5. Previously, ByteDance AI video generation model C-Dance 2.0 exploded online with its outstanding capabilities in multimodal input, text image to cinema level video generation, attracting global attention. Newly listed stock Haizhi Technology, stock code 2706, closed at 92.6 Hong Kong dollars on its first trading day last Friday, up 242.2% from the listing price of $27.06. Haizhi Technology is an industry-level artificial intelligence solution provider focused on graph model fusion technology. Based on 2024 revenue, the company ranks 5th among China's industry-level AI agent providers and first in the graphic-centric AI agent sub-market with about 50% market share. It serves over 350 large institutions and is widely used in fintech, public safety, energy, communications, smart cities, and intelligent manufacturing scenarios. Bank of East Asia announced full-year results up to end December last year. The share price plunged 11% to close at $14.14. Last year's operating income was 21.019 billion Hong Kong dollars, up 0.2% year-on-year. Net profit was 3.501 billion, down 24% year-on-year, versus estimate of $4.01 billion. Earning per share was $1.22. Second interim dividend, $0.22 per share compared to $0.38 in the same period last year. Full year total dividend was $0.61 per share, payout ratio 50%. Previous full year dividend was $0.69 per share. Full-year Common Equity Tier 1 capital adequacy ratio was 24.7%. Full-year net interest income down 7.3% to $15.322 billion. Due to falling interest rates, net interest margin narrowed 19 basis points year-on-year to 1.9%. Non-interest income rose 28% to $5.697 billion. Net fee and commission income up 14.8% to $3.216 billion. Full-year non-performing loan ratio 2.69% versus estimate of 2.87%. At year-end, the bank's Hong Kong commercial real estate NPL ratio rose to about 8%. At mid-2025, the NPL ratio was 7.5%. Average return on assets fell 0.1 percentage point to 0.4%. Average return on equity fell 0.9 percentage point to 3.1%. The group stated it continues to proactively and prudently make provisions for commercial real estate exposure. This year's provisions were 77% related to Hong Kong and mainland commercial real estate. The group's investment property portfolio valuation was also reduced by 723 million Hong Kong dollars. Since China announced preliminary 2025 results, total net revenue was $7.443 billion, up 5.1% year-on-year. Net profit was $896 million, down 14.3%. Earnings per share was $0.1108. Final dividend $0.5 per share. Adjusted property EBITDA $2.31 billion, down 0.7%, reflecting higher operating and marketing expenses during the year. Full-year operating expenses was $6.21 billion, up 8.7%. Meituan issued a profit warning, expecting 2025 loss between 23.3 billion and 24.3 billion yuan, compared to a profit of 35.8 billion yuan the previous year, showing a sharp deterioration in profitability within 1 year. The expected loss mainly due to the core local commerce segment turning from an operating profit of 52.415 billion yuan last year to an operating loss of 6.827 billion yuan, plus further increased investments in overseas business. The loss trend is expected to continue into Q1 2026. To cope with unprecedented fierce industry competition in 2025, the group strategically increased investments across the ecosystem, including on the consumer side, strengthening marketing promotion to enhance brand influence and price competitiveness, continuously improving user transaction activity and stickiness. On the delivery side, increasing rider incentives and enriching rider benefits to ensure service quality and improve user experience. And on the merchant side, continuously actively investing resources to support merchants in improving operational efficiency, expanding consumer coverage, iterating business models, and achieving steady growth. However, these measures will increase financial burden, though Meituan emphasizes it has ample cash on hand to support business development. U.S. stocks are closed tonight for President's Day holiday. U.S. January inflation data came in below expectations. U.S. stocks show mixed performance last Friday. The fear index VIX fell 0.22 points or 1.1% to 20.6. The Dow rose and fell to close up 48 points or 0.1% at 49,500. The Nasdaq fell 50 points or 0.2% to 22,546. The S&P 500 rose 3 points or 0.1% to 6,836. The Nasdaq China Golden Dragon Index, reflecting Chinese stocks, fell 234 points or 3% to 7,599. It's reported that the U.S. will add Alibaba and several other companies to the list of entities assisting the Chinese military. Alibaba responded that it is baseless. Its US ADR closed down 1.9%. For the full week, the S&P 500 fell 1.4% cumulatively, the second straight week of declines. The Dow fell 1.2%, the Nasdaq fell 2.1%. Large-cap tech stocks were soft, with Nvidia down 2.2%. Apple, which fell nearly 5% on Thursday, down another 2.3%. Alphabet down 1%, Amazon and Microsoft slightly down. Tesla rose slightly 0.1%. U.S. annual consumer price inflation for January 2026 slowed to 2.4%, the lowest since May last year, below the 2.7% in the previous 2 months, and below expectations of 2.5%. Annual core inflation fell to 2.5%. The lowest since March 2021, from 2.6% the prior months, in line with expectations. Month-on-month, the CPI rose 0.2% below December's 0.3% and expectations of 0.3%. Core CPI grew 0.3%, slightly above December's 0.2%. OPEC Plus members are preparing for the March 1st meeting. Some OPEC Plus members indicated there is a possibility of resuming crude oil supply increases in April this year, as concerns over global crude oil market oversupply have been overblown. Whether to increase production will depend on market conditions and geopolitical factors, such as potential U.S. President Trump's military action against Iran or reaching a nuclear deal, among others. Our stock pick today is MicroPort MedBot, stock code 2252. MicroPort MedBot announced that its core product, the 2-my laparoscopic surgical robot, has achieved a major milestone with global commercial orders exceeding 200 units. These orders cover nearly 50 countries and regions, with nearly 130 units already commercially installed. This significant breakthrough in order volume and installations marks the widespread and sustained recognition of 2my's clinical value worldwide, serving as a systematic validation of its safety, stability, and reliability. Surgeons from diverse countries, healthcare systems, and specialties are increasingly incorporating Tumai into routine surgical practice and long-term departmental development based on real and cautious clinical decisions. Among the nearly 50 countries and regions covered, 12 have orders exceeding 5 units. Emerging markets are showing particularly strong growth, with representatives such as India, Brazil, and Argentina leading the way. India has accumulated 14 orders, while Brazil exceeds 10 units. In developed markets, breakthroughs continued, with countries like Spain and Australia emerging as fast-growing points. Tumai's commercialization has formed a new pattern of multi-regional synergy and resonance globally, spanning emerging markets in developing countries and mature healthcare systems in developed nations. While accelerating its global layout, Tumai has also made breakthrough progress in the depth of single-center clinical applications. According to internal data, dozens of medical institutions worldwide where Tumai has been commercially installed have each completed over 100 surgical cases covering multiple departments including urology, general surgery, thoracic surgery, gynecology, pediatric surgery, head and neck surgery, and more. According to the group's published announcement, the board expects that revenue for the year ending December 31st, 2025 will increase by approximately 110% to 120% year-on-year compared to 2024. This substantial jump is mainly attributable to the breakthrough progress in Tumai's commercialization, with rapid sales growth particularly driven by significant expansion in overseas markets. New overseas orders signed throughout the year exceeded 100 units, and overseas market sales revenue for the full year was more than 5 times that of the previous year, with growth far exceeding the industry average, demonstrating strong global expansion momentum. Recommended buy price 27.5 Hong Kong dollars, target price $30, stop loss $26. I do not hold the above stock.